let's bring up Gary Booysen, who's a portfolio manager at Rand Swiss, to unpack the markets a little bit more. Gary, good afternoon to you, bud. Well, 2% gained on the JSE All Share. A good market compared to last week.
I think welcome relief coming through from investors and shareholders, and we're very much following on from the positivity in the European session and the Asian session this morning. We've obviously had the US closed for 2 days, largely because of the Thanksgiving holidays and much lighter volumes because of it. And I think everyone's sort of anticipating a return. Certainly the news around a potential Brexit deal, it still needs to be ratified by the UK Parliament still, but that also adding to the optimism. And we did see energy stocks collapse on Friday. That is actually fairly good news for other industries. As long as you're not holding energy counters, this is very, very positive news for markets as input costs and inflation should be curtailed.
If they do sort out Brexit very soon, which is now seeming perhaps a little more likely than some would expect, is there that chance that things will begin to stabilize just a little bit more and we may even begin to see a firmer correction, not just locally but in international counters as well?
I think so. Looking at the terms of the deal, I think it's right, the comments that have been given around it, which is, it's an acceptable deal, but it's still a deal where both Europe and Brexit and at least the UK lose. The separation of these two entities is certainly not good news for trade and for general economic welfare, but just the uncertainty that we've had around what the final deal will look like has created a lot of instability in markets. And with almost at least a final resolution, I think you will see stability returning and you might see higher markets on the back of it. While, absolutely I do think we're going to see, the potential, at least GDP growth suppressed in the Eurozone and the UK from where it could potentially have been. Yeah. Just the settling of that uncertainty certainly will be a positive thing.
Yeah, and of course you still have Xi Jinping and Donald Trump set to meet later this week, plus Jerome Powell set to come out, of course, as well, with that Fed policy statement somewhat as well. Is that going to be as key a significant role this week, you reckon?
Sorry, I think we're having a little bit of an issue with the sound there. Can you just repeat that question?
Just talking about Jerome Powell and basically the meeting with Donald Trump and Xi Jinping. How significant will that be as well for the remainder of this week, Jerome Powell and Xi Jinping?
I think, absolutely. The Fed, any speaking by the Fed is incredibly important. It drives the interest rate expectations for the US, which, unfortunately will drive interest rate expectations around the world. I mean, we saw last week that our local Reserve Bank hiked interest rates, and now that was very much on the back of expectations of further hikes coming through from the US. Certainly, looking at the commentary around it, I think most people were expecting a hold low in the local environment, just given our growth concerns. But unfortunately, with a developed market like the US continuing to increase interest rates and the rest of the world, and especially the emerging markets, suffering on the back of that as money floods towards the US seeking yield, it is going to be an important meeting because it's going to set the expectation. Looking at the tensions between China and the US, I think any optimism around some sort of deal or some sort of subsiding of tensions there will also be very positive, especially for emerging markets. We'll see that flowing into South Africa and hopefully see higher markets on the back of it.
Yeah, very importantly, we have to talk about that oil price. Now below $60 a barrel. The Saudis can't certainly be entirely happy with this, but Donald Trump kept on speaking about lower oil prices. He must be chuffed. And look, it doesn't hurt us, certainly, as we're about to get that fuel price announcement.
Absolutely. I think motorists are definitely looking forward to December, where they might see, it being a little bit cheaper to fill their cars. But, it's not just about the logistics. It's about, how the oil price feeds into inflation expectations across the board. It's about what that means for our at least our central bank as well, and whether or not they're going to hike interest rates. But I think, if you look at the geopolitical situation at the moment, you've got to say that Donald Trump has played this absolutely perfect perfectly. Originally, he approached Saudi, obviously put in the sanctions on Iran, then approached Saudi Arabia and said, with the Iranian supply coming out of the market, Saudi Arabia would need to pump additional barrels to meet that output gap. And then at the same time struck deals with Iran so that they could deliver oil into China and India and some of the larger economies. The result of this has been there's an absolute surplus of oil at the moment in an environment where we are starting to see demand waning. So that obviously has put enormous pressure on the oil price, and I'm sure traders will be looking forward to the OPEC meeting next week to see what kind of response they're going to have to these much lower prices. But in the meantime, the beneficiaries of a lower oil price are certainly the consumer and I think any other business that relies on oil as an input.
Yeah, certainly going to be an interesting one there. Gary, really appreciate your time there, but we could have even spoken about the rand. They're still around 13.80 against the US dollar. Gary Booysen, portfolio manager.